Everyone keeps screaming that we are in an AI bubble. You open your newsfeed and it's wall-to-wall panic about valuations.
Oh, absolutely. The narrative is set. Everyone's just waiting for the pop.
But if you actually, look at what the smartest money in the room is doing right now.
The people who actually move the markets.
Exactly. They're not just selling the top. They're doing something, well, much weirder. David Tepper at Appaloosa just liquidated his positions in Intel and Oracle.
Which, to be fair, isn't a huge shock. Those two have been struggling.
Sure, okay, dumping the laggards makes sense. But here's the kicker. He didn't put that money into safe U.S. treasuries. He didn't pile it into NVIDIA or Microsoft.
He was somewhere else entirely.
He took that massive pile of capital and put a terrifying bet on the one place every advisor tells you is, quote, uninvestable right now. He went all in on China.
And that right there is where we have to start.
Yeah.
Because what we're looking at in this strategic intelligence report for February 16th, it's not just a market rotation.
No.
No. We are witnessing what I'm calling the Great Bifurcation.
Bifurcation, that sounds structural.
It is. The market isn't just going up or down anymore.
Yeah.
It is tearing itself apart into two completely incompatible realities.
Okay, what are they?
On one side, you have most investors looking at PE ratios, quarterly earnings, the usual stuff. But the institutional smart money, they're looking at something else. They're looking at infrastructure bottlenecks and geopolitical distress.
All right, let's unpack that, because we have the documents right here. 13F filings, secret government procurement lists, regulatory shifts. And our mission today is to figure out why billionaires are buying Bitcoin and Chinese stocks at the exact same time the U.S. Navy is rewiring its shipyards.
It sounds like a conspiracy board, I know, but it's actually one cohesive strategy.
So let's start with the U.S. side of this bifurcation, the AI trade. For the past few years, the playbook has been dead simple.
Buy the brain.
Buy the chip maker. Buy NVIDIA. If you did that, you won. End of story.
Right. But that game, according to this report, is changing. The easy money phase of just buying the chip, that's over. We are now in the constraints phase.
Constraints.
Everyone is obsessed with who makes the silicon. The bottleneck, though, has moved. It's no longer about who makes the chip, it's about who powers the chip.
Ah, we're talking about the energy grid.
We are. We're moving from a software problem to a physics problem. A single AI training cluster can now consume as much power as a small city.
And the grid can't handle that.
It's not just the amount, it's the volatility. AI power use isn't steady, it spikes, it drops. If you just plug one of these giant clusters into a normal utility setup, you don't just trip a breaker.
What happens?
You risk physically melting the transformers.
Wait, literally melting them?
Literally.
Yeah.
The heat generation is astronomical. Our grid was built for, air conditioners and light bulbs, not for hyperscale compute running at peak capacity 24/7.
So the AI trade is becoming a utilities trade.
Precisely. And this is why you see Tepper selling chip makers who are falling behind, like Intel, and buying the pipes and power. He's buying Vistra Energy. He's buying the physical reality of the system.
It's the shovel seller analogy, but for power plants.
If you own the power plant that the data center needs to even exist, you have more pricing power than the guy selling the chips inside.
Okay, that makes sense. But there's a name in this report that connects the software back to the grid. And it's a name we usually associate with spies, not power lines. Palantir.
This is the critical link.
Yeah.
You have to look at the chain reaction launch mentioned in the report. It's a partnership with NVIDIA and Centerpoint Energy.
They're calling it the operating system for American AI infrastructure, which I have to admit sounds like pure marketing fluff.
I was skeptical too.
Yeah.
But it's not fluff, it's load balancing. Chain reaction uses Palantir's software to manage that volatility we just talked about.
So it's like a governor on the system.
It's a mediator. It allows the utility to say yes to these huge data centers without blowing up the neighborhood's power supply. Without that software layer, the physics just don't work.
So Palantir is basically becoming a utility company.
In effect, yes, which is a wild pivot. But if we follow that thread software controlling hardware, it leads us to the second massive tension point in this report. The U.S. Navy.
And this is where the stakes go from financial to existential.
That's a good way to put it.
We all know the story here. The U.S. Navy is in crisis. Submarine production is years behind schedule. The Virginia class, the Columbia class, we just can't build them fast enough.
The shipyards are broken. You've got labor shortages, supply chain nightmares, ancient infrastructure. It's a mess.
And then here comes Palantir again, with a $448 million contract for something called ShipOS.
ShipOS. It sounds so simple, doesn't it? Like an update for your phone.
Right. Is this just like Trello for battleships and project management software?
No, no. This is a digital twin of the entire shipyard. You have to understand, building a modern destroyer is impossibly complex.
Thousands of parts, thousands of workers.
And millions of dependencies. If the steel delivery for the hull is late, the welders sit idle. If the welders are idle, the electricians can't wire the bulkheads. It's a cascade of failure.
So what does ShipOS do?
It ingests all of that data. It knows every welder's certification, every bolt in the inventory, every design change, and it re-optimizes the entire schedule in real time.
The pilot program stats were, honestly, they were hard to believe. They said planning time for a maintenance cycle went from 160 hours down to 10 minutes.
That's the power of what you should call software-defined warfare.
Software-defined warfare. What does that mean exactly?
It means we are shifting from a hardware-first mentality to software-first. For 50 years, the Pentagon bought tonnage. They focus on the steel. Now they realize the ship is useless if you can't build it efficiently.
So they're buying the logic that builds the ship.
Exactly. And once you install a nervous system like that, you can't just rip it out. It makes Palantir critical infrastructure.
But even with that, we can't match China's raw tonnage, can we? Their shipbuilding capacity is just, it's off the chart.
We can't. So you find a workaround. And that workaround is Anduril.
Ah, the Replicator Initiative.
Yep. Look at the $23.9 million contract for the Organic Precision Fires-Light program. The Pentagon gets it. If you can't build one giant perfect ship, you build 10,000 cheap smart things instead.
You're talking about attritable systems.
Attritable, a very cold, very specific word.
It means expendable.
It means you expect it to get destroyed. Autonomous drones, loitering munitions, underwater vehicles, things you can build cheap and fast, and that you can afford to lose.
Which requires incredible software to manage that swarm.
Which is why the value is moving to software companies like Anduril, not just the traditional metal benders.
Okay, so the U.S. military and the energy grid are both rewiring themselves around software. But why is this all accelerating now? In February 2026, the government usually moves at a snail's pace.
That's the regulatory piece of the puzzle. There's a huge pivot on January 20, 2026. The Bureau of Industry and Security, or BIS, they just changed the rules of the game.
This is about the drone exports, right?
Correct. For years, the U.S. had this high fence policy. We treated almost all military drone tech like it was top secret.
Classified as National Security Column 1, what does that mean for the rest of us?
It means Fort Knox. If you wanted to sell one of these drones to a close ally, it took months, maybe years of approvals. It was a nightmare.
Great for secrecy, terrible for business.
And terrible for security, too, funnily enough. Because while we were locking our tech in a vault, Chinese firms like DJI were flooding the global market. The world standard became Chinese.
So what changed on January 20th?
They moved these systems to Column 2.
And then
The floodgates open. It's a drone flood policy. The U.S. government basically said, we need market share more than we need total secrecy. We're liberalizing exports to NATO and our allies.
wow, that's a massive philosophical shift, trading secrecy for ubiquity.
It's a transactional fence now. And they did the same thing with AI. Remember that AI diffusion rule from 2025? The one that was going to lock down the actual math?
Treating code like it's a nuclear weapon?
Exactly. That got thrown out. They realized if you ban the math, the innovation just moves offshore. So the new rule is we don't ban the model. We control the training.
And how do you do that?
By controlling the validated end users. We control who gets access to the massive clusters of NVIDIA chips. If you're a trusted data center in a friendly country, you get the compute. If you're in China, you starve.
So the strategy is lock down the high-end compute, flood the world with our drones, and rebuild our industrial base with software. That sounds surprisingly coherent. It sounds like a position of strength.
It does. It sounds like a winning hand.
Which brings us right back to the elephant in the room. If the U.S. defense and AI trade is so strong, why is David Tepper dumping U.S. tech and betting the farm on China?
This is the Great Bifurcation. This is the split.
We're talking Alibaba, JD.com, PDD Holdings. Tepper's buying them hand over fist.
He is. And you have to understand, this isn't a normal growth trade. This is what you'd call a binary outcome trade.
Explain that.
Look at the valuation gap. The S&P 500 is trading at, 24 times forward earnings? It's priced for perfection.
Meanwhile, the Hang Seng Tech Index in China
He's trading at 9 times earnings.
9 times. That is dirt cheap.
It's historically cheap. Tepper's thesis is that the market is wrong. about the geopolitical risk, or at least that the risk is already more than priced in. He's buying dollar bills for 40 cents.
But wait, what about the tariffs? The administration ran on a platform of 60% tariffs on Chinese goods. If that happens, doesn't this trade just go to zero?
That's the risk. That's why it's a binary gamble. But Tepper is betting that 60% number is a bluff, a negotiating tactic.
That is a hell of a bet to make with billions of dollars.
It is, but he also thinks Beijing has no choice but to stimulate their economy. They are desperate. He's betting they're done cracking down on their own tech champions because they realize they need them to compete.
So he's betting on a thaw.
A détente, at least.
Yeah.
He's betting that global capital can't resist a bargain that good forever. If China just stabilizes, those stocks could double.
And if the U.S. market corrects, China acts as a weird kind of hedge because it's already on the floor.
Exactly. It's the too cheap to ignore theory. But while Tepper is doing that, look at what Peter Thiel and Co. are doing.
Right. The digital gold signal.
These are venture capitalists. They look for 100x returns. But this report shows them aggressively buying Bitcoin ETFs. Co. a serious tiger cub, bought 56,000 shares of a Bitcoin ETF. Why?
This isn't a tech play for them?
No, it's a macro play. It tells you everything about their view on the US dollar.
They're hedging against debasement.
They're looking at the US debt spiral. Think about it. We're spending billions rebuilding the grid, billions rearming the Navy, billions on chip subsidies.
And running a massive deficit to do it.
And since you can't tax your way out of that, you print.
So when a fund like Co. buys a hard asset like Bitcoin,
they're treating it like institutional safety. It's graduated from a weird tech speculation into fire insurance.
Fire insurance on the currency itself.
Yes. In a world where fiat is being printed to pay for an AI arms race, you want to own the thing they can't make more of.
Okay, so one group of billionaires is building the machine, the power and pipes, and another is hedging against the cost of that machine with China and crypto.
Exactly. But before we wrap, I want to zoom in. The macro is fascinating, but I always check the insider signals.
Wallet watch.
Right. Forget the press releases. What are CEOs doing with their own money?
And there's a fascinating cluster buy at a company called Varonis.
Varonis, data security. Yeah. The CEO, Yakov Fadelson, and a director bought about $1 million of their own stock this month.
Which is interesting because the market narrative was that Varonis was dead. Microsoft Copilot was going to do security for free, and they were toast.
The market priced them for death. But the insiders are betting that AI increases the need for data governance, not decreases it.
How does that work?
Think about it. You deploy a powerful AI inside your company. It reads everything.
The CEO's emails, the HR files.
Everything. And then some intern asks the chatbot, hey, how much was the boss's bonus last year? And the AI just tells them.
Oh, wow. That's a nightmare scenario.
It's an instant HR catastrophe. You have to lock down permissions before you turn the AI brain on. The insiders are betting the AI creates chaos that needs software to fix it. Narrative is the right one.
That's a great point. It's a second-order effect. And then there's Reddit.
Reddit is key. A director, Sarah Farrell, bought nearly $7.5 million worth of stock.
That's a massive conviction buy. Is she just bullish on ad revenue?
No. She's betting on the farm.
The farm?
The data farm. These large language models are running out of food. They've eaten the whole internet, and they can't train on AI-generated text or the models get dumber. It's called model collapse.
They need fresh human thoughts.
They need verified, messy human conversation.
Yeah.
And Reddit is the biggest archive of that on the planet. That buy says she thinks the data licensing deals, selling that text to Google or OpenAI, are worth way more than the market thinks.
She's betting on the harvest.
Exactly.
It's amazing. Everything circles back to data and power, shipyards, power grids, Reddit threads. It's all about feeding this new system.
It is.
So let's bring it all home. What's the final takeaway here?
The takeaway is that the old map is useless. The idea that you just pick good stocks with nice growth, that game is over. The market has bifurcated into two completely new games.
Game one.
The power and pipes game. The U.S. reindustrialization trade. You're not betting on the software. You're betting on the physical constraints. Energy, grid infrastructure, copper, shipyard logic. The things that allow the future to happen.
And game two?
The macro hedge game. This is betting that the cost of game one breaks the system. It's Tepper buying deep value China because it's the only thing not priced for perfection. It's Thiel buying Bitcoin because he's worried about the dollar. It's a bet on chaos.
So you have to choose. Build the machine or hedge against the cost of building it.
Or maybe you do both. Because here's the thought to leave you with. David Tepper is betting billions that China rises, The U.S. government is betting billions on containing China.
They cannot both be right.
Exactly. One of them is going to be spectacularly wrong. If Tepper is right, the U.S. containment strategy has failed. The entire geopolitical order could flip.
And if he's wrong?
He loses a fortune, but that power and pipes trade likely screams higher as we dig in for a new Cold War. The smartest money in the world is split right down the middle. They've placed their bets on opposite sides of this canyon.
The question is, which side of the bifurcation are you on? That is a terrifying and exhilarating place to leave it. We'll keep watching the flows. Thanks for diving in with us.
Anytime, keep watching the flows.